My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends. I'm just trying to make you some money. My job is not just to entertain, but to teach, educate, coach. Call me, 1-800-743-CBC, or tweet me at Jim Cramer. What are we looking at here? Resilience or complacency? The average is staging a huge rally from last night's moment of crisis when Iran launched ballistic missiles at Iraqi air bases housing U.S. troops, and no Americans were hurt. I marvel at this market's ability to overcome even the toughest of obstacles. Dow gaining 161 points, S&P climbing 0.49%, NASDAQ pole vaulting 0.67%, although it was higher near I'd say about an hour before the close. So is this market being resilient, or are investors being complacent? Sell, sell, sell. Why not both? Yeah, that's what I think it is. I think it's a combination of these two forces, and I think they've taken control. First, let's cover complacency. A few days ago, the President of the United States ordered the killing of an extremely bad guy, an Iranian general who'd been the major architect of state-sponsored terrorism in the region. Now, I'm not here to litigate whether or not that was the right call. Not my call. What matters to the stock market is that most commentators immediately assumed it meant we were headed for war with Iran. Do not pass go. Do not collect $200. They just took it as a given that both sides would keep escalating until all-out war became inevitable. We saw the price of oil and gold soar. We saw investors buying waves of put options, betting on a monster sell-off. But at the same time, the stock market pretty much ignored the whole fracas, even when it became obvious that retaliation was imminent. Iran finally struck back last night when the market was closed. They launched more than a dozen ballistic missiles at air bases in Iraq that housed U.S. troops, and the overnight futures plummeted the equivalent of 500 Dow points. Now, next thing you know, the president tweets that it looks like there were no American casualties and all was well. You could see the futures start to rally. Then a Boeing 737 non-MAX from Tehran crashed right after takeoff, and a second wave of fear swept the market. But when no further attacks came, when the Iranian government tweeted that their message of revenge has been sent, the overnight futures reversed. And the pajama traders who sent the markets down 2% were revealed to be just plain wrong. Like I've been telling you all week, de-escalation was always on the table, and that's exactly what both sides seem to be doing. The scaremongering media did you a huge disservice by playing down that possibility. Things only got worse for the bears when we got the kind of bullish numbers that justified not only staying the course, but outright buying stocks. If you were complacent going into the Iran crisis, that complacency paid off when the president demonstrated restraint, baffling his critics, who simply can't conceive of Donald Trump with an olive branch instead of a bazooka. However, it's not just the de-escalation that induced a short squeeze. That was part of it, but no, it was something bigger. We got some genuinely good news from individual companies, as well as some macro information, and that helps explain the market's resilience. So why don't we take them down? All right, first, ADP, that's the nation's largest payroll processor. They showed more than 200,000 jobs created last month in its latest survey. While ADP is not the ultimate arbiter here, that's the Labor Department's non-farm payroll figure that comes out at 8:30 on Friday. It showed that the Fed's rate cuts, they're working. We also know the cuts are working because Lennar, gigantic home builder, LEN, reported today that every single line item was a beaut. Most important, new orders were up 23%. Even better, management told us that California, 1/5 of the country, but an even larger percentage of the nation's housing market, has bottomed. It's been in a lot of trouble out there. Just numbers peaked a little while ago. Now it's recovering. That's all about J-Powell's rate cuts working their magic. Third, we got a same-store sales number from Macy's that was Naboth. Don't you remember Naboth? Not as bad as feared. The company continues to close underperforming stores, trimming its footprint to the point where it's left with mostly good stores and high quality, what are known as A or B malls. This is a smart strategy. Should have been done a while ago. It's also a reminder that we could see some much better numbers from retailers, including Nordstrom, perhaps Home Depot. Between the strength of Lennar and the strength of Macy's, I got to believe that the housing-related chain can reverse its recent underperformance. And then after the bell tonight, Costco, 9% same source sales, 9%. Unbelievable. They did amazing e-commerce. It used to be an afterthought for them. Wow, I got to go to Costco. Someone just tweeted me that Kirkland has great locks. I like to go to Russ and Daughters. I mean, I'll go to Kirkland. Fourth, tech's been roaring all week, but we needed some reinforcements to keep the ball rolling, and that's exactly what we got from Apple. Apple holiday sales specifically. The company released some data on holiday app sales and my AirPods. The numbers were staggering. It's not easy to move the stock of the world's largest company, but this news allowed Apple to climb nearly $5, breaking through the $300 level. Hey, you know my thesis. It really hasn't changed that much. Apple, own it, don't trade it. This company has an incredible track record of innovation and customer satisfaction. Well, that keeps monetizing their 925 million iPhone users. Now, look, I was on vacation recently. 7 other iPhone owners, all older models, unlike me with my spiffy 11. He's got the 3 cameras. Despite the continued carping from the naysayers who are driving me crazy that there's nothing new under the Apple sun, I think every one of my trip mates now feels the need to own the iPhone 11. It's that much of a leapfrog. Same thing with the 20 people in the box that the Eagles lost last Sunday, where only my phone was worth taking pictures with. Pictures came out too dark for the other models. So much for the no innovation rap. Fifth, steady drumbeat. We've had unbelievable coverage at CNBC of CES. Incredible utilization. We're starting to see these new technologies really pay off. 5G. The Consumer Electronics Show is just amazing this year. It's pretty similar to the upbeat commentary we got last night from Harman's Dinesh Paliwal. Did you catch that? He regaled us about stories about products that we've seen, I think would have seemed impossible recently, maybe recently as a couple of years ago. Not enough good news for you? How about a story that almost nobody noticed? This morning, American Express finally got the nod, after years and years of waiting, to open up a Chinese franchise all on its own. No meddlesome joint venture partners here. Good news. It's really kind of the thing that I didn't expect to see right now. And I think China's going to follow through with its promise on the Phase 1 trade deal. What does it mean for MasterCard? What does it mean for Visa, for Goldman Sachs? No one's waiting to find out. They're just buying. Or how about the companies that were supposed to screw up but didn't? This morning, Constellation's brand symbol STZ reported a very strong quarter, fabulous beer consumption, and not just from the Modelo and Corona that we sell at Bar San Miguel, my small plate Mexican restaurant in Carroll Gardens, Brooklyn. That wouldn't be so important if there hadn't been a story circulating yesterday that Constellation might have a shortfall because of slowing beer sales. Sure, beer sales, well, they were not as great as they had been another time, but they were pretty darn good. And compared to everyone else in the business, these guys are crushing it. We're going to do a deep dive on Constellation later in the show with Bill Newland's fabulous CEO. Let me throw in one more. It's one that I've kind of bashed of late, Grubhub. I've been extremely bearish on the online food delivery business. I think there are too many competitors, and it's ripe for consolidation. The private DoorDash already bought Caviar from Square, which, by the way, is finally getting respect for its growth, post the departure of the amazing CFO Sarah Fryer. But the industry needs more deals, and today Grubhub said they're considering a merger. No wonder the stock roared 12%. Here's an idea. They should either be bought by DoorDash or buy Uber Eats. Uber would go to 45 if that happened. Oh, and of course, we still had one more day where Tesla steamrolled the shorts, thanks to some price target bumps. Netflix soared on a note that perhaps there's no churn coming from the Disney Plus initiative. The bottom line, all of these bullish notes create conviction, which creates resilience and causes the complacency that keeps potential sellers from selling. That's how they have a spectacular rally. Let's go to Joe in Pennsylvania. Joe!
Booyah, Jim. I'm a first-time caller, long-time listener.
Oh, thank you.
About 19 months ago, you had a show regarding the cloud princes. You mentioned that Coupa Software was one of the best of the princes. The next day, I went out and bought 100 shares. Yesterday, they made an acquisition of a travel and expense specialist company. They reached an all-time high today. I'm up 185%. Do you think it has more room to run, or should I sell?
I thought that deal was very good. I think management's doing incredibly well. Bulls make money, bears make money, hogs get slaughtered. So take off a little, let the rest run. It's a great story. Let's go to Phil in New Jersey, please. Phil.
Who are you, Dr. Cramer? How are you?
Hey, good. How about you, Phil?
I'm doing good. I'm glad the market came back. It's been what a whirlwind of a night. But I tell you, I took advantage of after hours last night and bought some good stuff. So
that's so great.
Hope we get more of that. But anyways, I wanted to talk to you about Broadcom. So, I did my homework. They came out with good earnings. The company's solid. And now they're selling part of Symantec off. All the semiconductors are going up. This one seems like it's on a downtrend. I bought some yesterday, and I want to buy more, but I'm not sure if I should get out
No,
and
you
buy
should.
NVIDIA.
This stock is not valued correctly. I think it can have much more room to run. 13 times earnings, 4% yield, really fabulous management. You're not making any mistake. Broadcom's a winner. How about we go to Rod in Wisconsin? Rod.
Hey, it's Rod. Big booyah from the frozen tundra. It's burr cold in Wisconsin.
Well, good luck. You got you got some big football coming up. What's going on?
I'm a retired Teamster bus driver. I took a hold of a rocket called Align Technologies a few months ago.
Right.
Back in August, it kind of tanked. The market took a big bite out of it. So I like to follow rules. So over the next couple of months, I bought $25 blocks. My average cost now is $200 a share. I sold half of it, made a $75 a share profit. I'm hanging on to the other half. Earnings are coming out at the end of the month. I don't know if I should hang on to this rocket, take my $4,000 and buy Packer Super Bowl tickets, or
well, I love that call. I think the stock's had a very big run. I want you to take a little more off the table. It is a competitive industry, and you've really made it's been a terrific buy. Go see the Packers. All right, is this market illustrating resilience or complacency? How about both? On Mad Tonight, what the dividend cut in Core Labs, a frequent guest on Mad Money, signals for the overall oil market. Then pets aren't just for cuddling. Man's best friend can help warm your wallet, too. I'm eyeing 2 companies that can help you make money off the trend in the new year. And Constellation Brands earnings beat. Well, let's just say it could make you want to have a celebratory cocktail. I'm breaking down the numbers with the CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.